Everyone's waiting for the Fed to cut rates, but here's the catch. Mortgage rates usually move before the Fed makes a move. Well, this week's big news was core PCE, the Fed's favorite measure of inflation. Prices rose 0.3% last month and 2.9% year over year. Those are right on target, though, so no surprises there. That means a rate cut at the Fed's next meeting on September 17th is still possible. But the real test is the jobs report that we'll get on September 5th, along with how they revise the 2 months prior to that. Some voting Fed members actually expect that we'll see negative jobs numbers for the first time in a while, which will be market moving for sure. Now, here's a quick refresher. When the Fed adjusts rates, they change the Fed funds rate. That's bank-to-bank lending, and it influences mortgage rates, but doesn't set them directly. Now, in housing news, signed contracts dipped a bit from June to July, but that was right before the mortgage rate started trending lower. Now, if rates keep dropping, expect buyer activity and probably home prices to pick up again. Now, realtors, this is your sign to remind buyers that waiting for the perfect rate might mean paying more for the actual house itself. Now, here's your mortgage truth bomb. Mortgage rates often fall before the Fed officially cuts rates. By the time Jerome Powell announces a cut, the market may have already priced it in. Translation? Waiting for the Fed's big announcement could actually cost you money. I'm Dan Artis. Like and subscribe for weekly updates just like this with zero fluff. And if you're buying, selling, or refinancing, my links are in my profile.